Hello traders and welcome to another video review. Today is Tuesday, the 9th of March 2021. Let's take a look at the Forex calendar and then we will see what can we do with the technical analysis. So, what do we have today in the calendar? As usual, some data had been published already, mostly from Japan and from Australia. As you can see, the Japanese data wasn't really that important. The biggest impact or the biggest importance for the traders had a gross domestic product from Japan released 10-1 for the this data are for the fourth quarter, and as you can see, it deeply disappoints the investors. 2.8% versus the forecast of 3% on quarterly measure. This is a failure of failure to deliver the correct or expected data. Australian, as you can see, business confidence index is now it's a New Zealand. It's a New Zealand business confidence 0%, or 0 points. Expected was 5.1. The previous was 7. Deep deterioration in the New Zealand. The same situation on the this is apparently Australian business confidence, 16 points versus 11. So the confidence in Australia is rising. People are more confident in business, so it might be kind of interesting to see how this one will develop. So we will take a look at the Australian dollar and the New Zealand dollar today. The trade balance from Germany, as you can see, is widening, 22 billions euro, so it's better than the forecast of 17.9 and better than the last month of 16.4 billions euros. So that's a nice surprise. What do we have else scheduled for release? 11 o'clock, data from the Eurozone, GDP revised numbers and the employment change. As you can see, GDP revised is not really expected to be like a big surprise. If it stays at the same level as the last quarter, because this is the fourth quarter data, so that will be quite good numbers. If it deteriorates even deeper, then well, GDP will not be that great anymore. During the New York session, we have only a speech from MPC member Andy Haldane from of course UK, and then as you can see from Australia, at 11 o'clock we got the Reserve Bank of Australia Governor Philip Lowe speak. So I think the Australian dollar is a good one to start with the analysis. So overall, not really busy day, not really interesting day in form of some sort of the importance data released. So let's just take a look at the charts as usual, because not really a good day for the news traders, let me say. So Australian dollar daily time frame chart, what do we have here? As you can see, we are going down, and right now, one more, let me just zoom out. Right now we are below 4% down since the top at 8,008 pips was made. So this correction is bigger, 4.81, than the biggest correction during the up move, 3.22%, which means we have price over balance. What it means is, of course, that this down move might be the beginning of the new trend to the downside, or the new larger correction, which is not a part of this move from 2nd of November 2020, right? So this move up looks like it is completed. So we have bearish engulfing pattern at the top on the daily time frame chart. We have a bearish continuation, bounce and test of the trend line, rally capped at the level of 7,822, which is as you can see our blue arrow level. So that's the key technical resistance. down move continuation below the price of a balance level. So right now bears are in charge of the Australian dollar market. Of course, this was our technical support, 7,679. Right now this level is our technical resistance, so it's now red. So not a good news for the bulls, because the bears are getting lower and lower. Let me just move this one a little bit, and the next target is 7,564 pips, which is the low of the 2nd of the February 2021. If violated, then of course we can go as low as 7,483, 7,464. The key technical support right now is 7,415, because it is a high of the previous wave up, right? So that was the pullback and then breakout and another higher high. So this is the key technical support, 7,415. So please keep an eye on this development on the Australian dollar, because as you can see, we are already in the negative territory, 42 points. There is still some room left to the 30 points. There is still some room left to the south. So there is basically increasing bearish pressure, as you can see, from the momentum side and from the price side on the Australian dollar. New Zealand dollar should be in the same situation, and there you go, it is. Let's just zoom in to see what is going on. The previous biggest correction or pullback was like a 3%. This time we have it more. We have already 4.91% during this single move down, which means again this is a part of a new cycle. It's not a part of the old cycle up. This is a part of a new cycle down. It might be a pullback, it might be correction, it might be new trend. We will see what it's going to be. And as in the example of a Australian dollar, right now I'm changing the colors to red, because the levels of 7,151, 7,175 are now technical resistance for the price. The key technical support on the other hand is seen at 6,941, 6,972 pips, and it might be hit very, very soon, because we are under 40 points on the RSI. So still a room to go down on the RSI towards the level of 30, a room to go down from these levels towards 6,972, 6,941 on the New Zealand dollar, which is very interesting, because we haven't visited this level since the breakout of 24th of the November last year. So please pay attention to the current development on the New Zealand dollar. This move down is already almost 5%. It doesn't look like a part of this move up anymore. So something is cooking. And what can be cooking here? Let's just take a look at the US dollar index, because if Australian dollar is going down and New Zealand is going down, New Zealand dollar is going down, that means the other currency must be going up. And as you can see, the US dollar index, well, Australian dollar and New Zealand dollar are not that much part of the US dollar index, but however they are still being quoted to American dollar. So American dollar is going up just as the scenario said, right? Just as expected. And right now, those levels here, we are changing the colors, because of course they are now technical support. So 90.92 is a technical support, 91.3 is a technical support. We have this technical support as well, 91.72. And let me just take a look here, because I think we should use one more technical support, which will be the high of the C wave here, and that would be of course the level of, let me just move it a little bit lower, 91.59. So right now this is our zone, this is our our target for the wave 4 and our zone, demand zone for the bulls, of course, so we can make it green. And there you go, it comes, here comes the green rectangle. So this is now our green zone. It's a key, of course, level from the technical point of view. From the Elliott wave perspective, the high of the wave 1, 91.38 is the key level, because it's a impulsive wave invalidation level. So please keep an eye on the US dollar index as well. Let's take a look at the end on Bitcoin. What is going on the cryptocurrencies? As you can see, this level here, this wave here, wave to the downside, that we mark at the top of the 52,506 from a 3rd of the March, is no longer valid because the wave B is going up, but right now it's still 3 waves. So from the lows of this, there is a wave A, wave B, and that's a wave C. This is still not an impulse. So I will keep my ABC pattern here, because it still might be a deeper correction there, but please keep an eye on the current development in wave B. It might be a double zigzag, or first it might be a zigzag, then it might be a double zigzag, but this is definitely something important, and it looks very interesting, that move up towards the, well, we are approaching the highs on 58,189. So right now we have two choices. The first scenario is A, B, and C had been completed, where the low of the wave A is already, and we are starting the wave up, which will be impulsive in nature, or we have ABC as a wave A, just as it is right now on the chart. Now we are doing ABC to the upside, wave B, which will be a little bit bigger in price and time than expected, and then we can wait for the 5-wave decline in the wave C. That's the second scenario. So if this level 58,258 is clearly violated, then we know that this scenario is invalidated, and the lows for the correction are in the place of the old wave A, and this is still wave 5 in the developing, but it doesn't look really like it might be break above the 58,000 level. I think it's still ABC move to the upside. So I will just leave this pattern, leave this scenario, leave this chart still open for the interpretation. So we will just leave the Bitcoin. Yeah, I think that's it for today. That's everything from the cryptocurrency side and the US dollar index side. So please keep an eye on the levels I've just mentioned, and I hope I see you guys tomorrow with a new fresh analysis. So take care and bye bye.